Well, it's the most anticipated stock market listing since Facebook went public last year. Micro-blogging site Twitter is expecting to raise $1.8 billion in the process. Well then, let's take a closer look at this with our business editor, Abid Ali. Well, that's a lot of money, isn't it, Abid, for a company that isn't even profitable?
And this is the debate that has many in the investment community divided. But it would appear right now that there's a lot of bullish people out there who believe that Twitter is the story to back right now. Let's look at some of those numbers behind Twitter. A comparison with Facebook. Look at the valuation. In the world of finance, companies are measured in many ways. Revenue, earnings, profits being the most popular. And in this case, Twitter is valued at $18 billion, which means that it's worth 44 times more than its revenue. And look at Facebook at the below it there. It's 123 billion, and it's only valued at 22 times its revenue. Just imagine if you went to the bank and you said to the bank manager, "Can I have a mortgage, please?" And the bank manager goes, "How much do you need?" And you say 44 times your earnings. He'll laugh you out of the park. But Twitter managed to raise $1.8 billion from people. When you think of Google, Microsoft's established companies, they have been valued at 47 times their revenue. And look at the profit and loss. We see that Twitter has made a loss of $134 million, and yet it's got a substantial valuation. And then Facebook is worth had a profit of $1 billion. So investors are looking beyond this, and they say, look at the users that are active on each of these sites on a daily basis. 1.1 billion for Facebook, only 232 million for Twitter. Consider this. If Twitter continues to grow at the same pace as Facebook, it will get to that number within the next 2 to 3 years.
Now, Abid, what do they plan to do with all the money they raise then?
That's an interesting question, because what they intend to do is to what they call acqui-hire. This is where they find employees that they would like to have within the company, but they're working for other companies, and there's usually software programs, and so they'll buy the whole company. And that's the first thing that they'll do, because that's what they're interested in. But they're also interested in finding companies that can help it to put adverts on air.
Interesting. Thanks so much, Abid Ali, our business editor.
Thank you.